Hello, everybody. Jim here. I hope you are great and the time has finally come. First and foremost, excuse the sound in the background. Is my son playing with YouTube and stuff like that. That's the first thing. The second thing, I don't want to waste your time. So if you are looking for someone professional with editing stuff and a cool video, highly editing, professionally done, you are in the wrong place. However, if you're looking for something that gives you results in the forex markets and you are interested into making money, you are in the perfect spot. Okay, so don't judge a book by its cover. In the production of the video and how the things is, I taken like 2 hours to set this up out of my Sunday because I'm heading over the beach with coffee the Greek way. But anyways, um, now a lot of you asking me about to create a group that I could share some of my, let's say, help with some of my positions, and because I saw many groups with people that giving the signal and never actually taking the signal, um, I decided to change a little bit. I don't want to say other groups are scams, but 99.9% are. Okay, and that's the truth. Now, if you are interested, you are in the right spot because I will create my own signal group. If you are interested for something cheap like $20 a month, no, this is not the place for that. It won't be expensive, but it won't be cheap either. And it will have verified results. Okay. Now let's see how we will do about this. We will have three strategies. Okay, three things. Let me actually pull the trading view. Maybe you are familiar, maybe not. I won't educate you. Okay, if this is what you're looking for a group that providing educational content, no, I don't have time for that. Now, let's forget for a while the chart here and let's focus. I mean, if you are part in any other group, okay, now what usually happens, they give you a signal, which is a buy or a sell, doesn't matter. Now, this example would be based on buy, okay. Now, let's say it's something like that, all right, which maybe put it like that. Let me put it like that. Now I'm looking this, the risk reward is like 1 to 3, 1 to 2, 1 to 1. This is the type of the signals that they usually do. Maybe it's like that. Or maybe it's like that. But you get the point, all right? Now, this is the strategy number 1. Let me put it 1 to 3, whatever. Okay, and here is what's usually happen. Now, most of the times they will have, let me put here a line, here at TP1, and maybe they say here TP2, and here is a TP3. And you have two options. One, you take the order, right? And as it goes here, boom, I'm back. So Back to what I was saying is most of the groups, when you take the order, you have two choices. Is you either take one position and you adjust. Here is your stop loss, for example. Here is your entry, and as the price is going up, okay, and hit TP1, you take a partial. So let's say you open with one lot, price came here, okay, and you take 0.30 lots out of the profit. Price continues, goes here, you take, TP2, you take another 0.30, and then you take the rest at the end. That's the option number one. Option number two is you open three orders. So you put 1, 2, 3 orders, and now with that you need to be careful actually to calculate the based on the stop loss. So on each order collectively, let's say they will have 1% risk collectively, which means this would be 33 cents, 0.33, 0.33, 0.33. This is an example. The position is based on the stop loss, obviously. But let's say you want to open one lot position, you split it into three positions, and when the positions reach here, you take one, second position reach here, take another one, and here you take the last one. Now, that's what happened. Now, the problem is this is how the groups give the signal most of the time. Now, the problem is that most of those, they don't know what they're doing. The second is, even though a lot they give TP1, 2, and 3, or 1 and 2, whatever, and usually on gold, what do they say is after the price goes 20 pips, somewhere, let's say around here, okay, they telling you, hey, take half lots out, take half of the profit, or take 1/3, or take something out, okay. So now this is not bad in the context of actually taking profit. It is bad though on the long run because they are unprofitable. Now let me tell you why. Let's say you risk here. Let's say you have a 100K account funded, you risk 1%. Okay, 1% is 1,000. So if you take the entry here and hit your stop loss here, you lose 1K, $1,000. Now, let's say this is 1 to 3. So if you hit profit full, you get 3K. Now, what will happen is if, let's say, close here half, let's say this is 1K, this is 2K, this is 3K. And let's say you close half of your position here as they telling you to do, okay, the position is making, let's say, $300 because it's after 20, 30, 40, maybe sometimes 50 pips. They telling you without hitting the TP1, close half. So let's say you have one lot, okay, and the position is making, let's say, 500, okay, which is hardly that much. Now, you taking half of those, you take to the bank 250. Now the position goes and you have now 50 cents instead of one lot, 50 cents, and goes and hit, let's say, TP1. Now here, from here, you will get another 125. And if it hit here, you will get another 125. And if it hit here, you get another, let's say, 250. Now, here is the problem with that. Now, most of the times, what will happen is it will, let's say, tell you trick half, which would be after 20, 30, 40 pips. Okay, and then the price will hit break even, which is good, free trade. What is bad is like their profitable, the profitability lies into when they hit the stop loss. Okay, you lose 1k because you lose the full amount of the signal. You take one signal, you hit the stop loss, you lose the 1k. Now, even if, let's say, the next three ones are profitable, the way that they are doing it, okay, it would be 250, 250, 250. Still, you will be down because when they make money, okay, they are taking a lot of partials. When they are not making money, they hit the full margin. Even if it hit TP1, okay, if you lose one, you lose 1k. If you hit one, okay, and you hit TP1, you get 300. You need to hit 4 signals to even be profitable. 4 signals with the fees that you pay with the broker. I hope that makes sense. So even if you hit 3 once and then the next one you hit break even, you still be on the red. Now, the strategy, oh my god, it's 12 minutes just to explain one of the things that we will do. And keep in mind, most of the groups are losers. They are losing. I don't know if you are part of any group, but if you are, you know the results. Very, 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 very few groups are good. Okay. Now the way that I do it, okay, and those groups feed me for life. It requires some skill, but you need to understand some key stuff. So maybe this would be an eye-opening for you. Maybe not. Let me. When they take a buy, okay, I enter a sell, and I am on the opposite side. Now, why I would do that? Because first, I know even the broker websites, they telling you like, hey, 90% on our website, 80%, 97% that do forex on our website are losers. So by simply doing the opposite of what the losers do, okay, it gives you a small edge. That's the first. Second thing, it's, I will tell right now, you might have an aha moment because here is what's going on. What will happen by doing that? And it's all about management. Now, if you follow signals or trade on your own, what would happen is when the signal is going into your way, you would take profits or close the position. But when the signal is against you or the position, you never like reduce your risk. You either hit stop loss or you don't have stop loss and goes until you blown the account. Sound that familiar? Now, me, by just reverting the signal. First and foremost, my winners would be more than the losers. Why? Because they have more losers than winners. That's the first thing. The second thing is, even when I lose, I want to lose the full amount. For our example before, okay, when they lose, someone lose, he lose 1k. Now, probably he have TP1, TP2, TP3, etc. Right? Now, what will happen is when they take a partial here or here, okay, and me, because their order is going into their profit, so my order is going into the red, okay, here, I'm actually taking also the partial, so what will happen? I'm reducing my risk when I'm losing. So if I take half here and the position losing, let's say 500, I would lose 250. All right. So when they hit their profit, okay, yes, I will lose, but I won't lose the full amount. I will lose, let's say, 600. But when I will win, which would be more times, okay, they won't reduce their risk. So I will hit the take profit um, because they will hit their stop loss with the full amount. That's the first thing. Another thing, not first, I mean, I have talked so many points. Another thing is that a lot of people, what they will do is as their order goes into negative, they start increasing the risk with the hopes and dreams that it will go in their way. It won't. Okay. Um, Now, of course, there is some skill into the game, like to find the sweet spot of actually having it, because I don't want to have um, a position to be something like that. Let's say here, let's say here, and my stop loss to be here. So there is some skill to find the sweet spot, which is around 1 to 1. So somewhere around here and somewhere around here, okay, to be on, let's say, 1 to 1. Here, something like that, okay. And I'm telling you, other than having that skill to know where are the sweet spot, which is all based on backtest and optimizing the stuff, the only next work is to find the losers one, the losers. So yes, there requires some skill, which I do, okay, and it would be like printing money. Now, how this just the fact that you do the opposite, because more times they will hit the stop loss than take profit, it gives you an edge. Then by reducing your risk on the take profit, on the stop loss, reducing the risk, but you hit the full TP, okay, while they do the opposite, it gives you a significant edge. Significant. So it doesn't matter even if you hit 3 stop loss in a row, one win, you make it all back because you take the full amount. While on following signals, you need to hit 6, 7 wins to actually making a good amount. Okay, that's another thing. What else I wanted to say about this system, and this would be just one of the three systems. Now, the groups also, there are two types of groups. Okay, it's either with Indians, Nigerians, whatever, that they don't actually trade and they just, sharing the signals, and they are losers. But someone could be a loser for so long until he decides it's time to switch things around, which they should do. And there is the second type of group that is actually a company and hire a trader, and they give him like 2 3 months in, let's say, period to share signals and evaluate the results. And after 3 4 months, if the trader doesn't perform good for them, which means it will perform exceptionally good for me, they change the trader. So I need to monitor that, because they might find a good trader that hitting take profit multiple times, so I will hit stop loss multiple times. So maybe it will worth to me to copy that trader in the way that when he plays a buy, I place a buy. When they place a sell, I place a sell. And it's mind-boggling for me that the prop firms don't do the same on the valuations account. What do I mean by that? I mean, we know 95% they burn the valuation account. I know a guy that have spent like, I don't know how many thousands, but he have lost more than 60 accounts. All what they had to do, because on evaluation, 95% fail, 5% pass, and from that 5%, not even 1% to reach the first payout. Okay, so we're talking about 99% fail rate, and the prop firm doesn't have money because someone like me goes and boom, take a huge payout, and many other. Okay, but there are very few of those. And because the prop firm doesn't copy the good ones, doesn't copy the bad ones, reverse trade copy, um, it's you know they they don't have money, essentially. Not all of those. Some they monetize the data, but I mean, you need to have a little bit of a brain and understand some stuff in order, to do that. But it's doable. And this is the first signal. Oh my god, 25 minutes. I hope it would be like 8 minutes. I won't like edit it a lot. Maybe I will shoot another video in the future, but I want you to understand what we will be doing here. So this would be system one. And then we will have another system that, let's say, I will show again long positions, but we will have long and short, which will be more like this. And all right, this should be from 1 to 4. So you risk 1%, you make 4%, 5, 6, 7, 8%. Okay. Now that would be with pending order. So you will know it between, I don't know, 30 minutes to 1 hour. It would be based on higher time frame analysis. Um, it might hit, it might not hit, for example. So you need to be a little bit on top of that because the price might go here and jump. Maybe you want to enter manually. Okay. Um, that's and if that signal hits stop loss, guess what? It's okay. Because at the end of the month, this should be profitable. Okay. How much? Between, I don't know, 5 to 30% a month. Okay. So that's that. Those signals, because it's higher time frame, would be fewer between. So let's say it would be like maybe 3 signals, 4 signals, 2 signals, 5 signals a week. So it would be between 2 and 4 most of the times. Okay. Um. Yep. And this is the second strategy. Let me see if I can go put it here. Okay. Let me put it here. Strategy number 2. I mean, I don't need that. Right. And strategy number 3, it would be, this would be market execution, which means you will need a Telegram copier. On the next video, I will show to you few Telegram copiers, what I use, what I think is the best, do I use the best, and stuff like that. Maybe you found a free solution. Maybe I will build one for us in the future. Who knows? Who knows? But I will show you a few stuff on the next video. Strategy number 3 would be again market execution. So it would be harder to do it manually. Would you be able to do it manually? This and this, yes, because the stop loss is higher. So if you take a position and let's say it's here or it's here, okay, it's okay, okay. Um, but this one would be with like that stop loss, and sometimes even that. Let me see, 21, 22. No, I put it something like that. Now it's gonna be like that, but even on a small move, right? As we could see here from 22 to 34, let's say 32, which is 100 pips, it is 10%. So in this case, even 20 pips or 30 pips, which is doable, okay, is 3%. If you're using a broker with higher spreads, you adjust the stop loss accordingly. It's ideal to have a copier. You might try to do it manually. You probably won't be able to do it because for that you have literally like 10 seconds, 5 seconds. But if you use a copier, yeah, it will work. You adjust the stop loss depending on your broker. Also, you could close early. Doesn't matter for me. Everything would be recorded. Let's see what else. Yeah. Yeah, I mean, I will shoot another video later to show a little bit more stuff, a little bit about the setup. I just right now wanted you to have an idea on how everything will work. Maybe I will shoot this type of video again, rewording it in order to be easier to follow and digest, maybe from 30 minutes to be 15 minutes to explain everything. And yeah, let's do it, guys. Cheers.